Well, hello, everybody, and Happy New Year. We can say that because this is the first podcast that we're doing for 2025, and we're obviously excited to be continuing this series for our SMSF trustee listeners and subscribers. So happy 2025. I can also say happy Chinese New Year as well, Year of the Snake. So we've got all of that out of the way. Welcome to the Trusted Trustee podcast. As usual, I'm joined by Tracey Besters. Hello, Tracey. How are you? Great to see you. Happy New Year to you as well.
Thank you so much, Darin, and Happy New Year to you as well. And I can't believe that we've launched into 2025 and we're, end of January. And this is our first podcast because, we've been having holidays. So that's been nice. So it's nice to be back, though. I'm really excited about it.
Yeah, we slacked off for a little while because we just needed a little bit of a break over the festive period, but we didn't celebrate too much, so we're back on track now, and we're ready to go. And this episode, as usual, is brought to you by Super Fund Property Valuations, ATO compliance in a click. If your SMSF accountant or auditor is on your back for property valuations, just order an affordable report from the experts with ease using the details you can see on the screen now. Or go to superfundpropertyvaluations.com.au. And once again, we thank them for their support, of course. And as I always say, property valuations, a massive focal point for the ATO. So you really don't want to be getting this wrong. And with a lot of events to play out in 2025, especially with the election coming, there's probably even going to be more focus on this area. So make sure you get your valuations right. And it's probably a pretty good segue because last episode we spoke about some of the property issues with getting property into an SMSF. So we're going to continue that theme and go a little bit deeper, I suppose, or a little bit more granular in what we talk about today. It's going to be more around business real property, which is one of the best strategies to include a business real property in your SMSF. There's all sorts of great rules that you can take advantage of. So we're going to be talking a little bit about that. So, Trace, let's start by, how good having business real property is in your SMSF. We talked about getting property into it in general, into an SMSF, but there are even more special rules with business real property because you can actually transfer that asset from individual ownership into your super fund, can't you?
Yeah, you can, Darin. And I think that just to create a distinction between the super fund having its own cash or borrowing money and buying property from a third party, there aren't any restrictions in the SMSF or the superannuation rules around what type of property the SMSF can buy. But where you actually want to buy property from a related party, being you as the member or a related entity or an associated entity of yours, there are some specific rules about either transferring a property in and using some of the contribution rules, or actually selling a property that you might own yourself to your self-managed super fund. So the distinction there is who you're actually, or who the super fund is actually acquiring the property from. If it's acquiring it from someone unrelated, like you and I, Darin, are not related under the related parties rules, I could buy a property from you in my super fund, and I could buy a residential property or a commercial property, and there wouldn't be any need to have a look at the rules that we're going to talk about today. But if I was wanting to buy property from my husband and put it in my super fund, then that would be a different scenario. I would have to look at the rules in the business real property rulings, because the super fund is prohibited from acquiring an asset from a member or a related party of the fund unless it meets business real property definition. So it kind of is just that distinction. So it's not about what the super fund can invest in, it's about acquiring an asset from a related party of the super fund. And that's where these business real property rules come into play. So I just wanted to make that distinction before we talk about some of the fun stuff with business real property.
Yeah, absolutely. And again, as we start just in that opening statement that you just made, so much to unpack just in that alone, really.
Yeah.
And I suppose people might be scratching their head and figuring out, well, what is business real property? So I suppose the definition right away has to be established and determined, doesn't it?
Absolutely, Darin. So we're really going to be referring back to quite an old ruling. I'm going to be talking ancient history, well, modern history compared to ancient history, but in our world, ancient history, with some of the things I'm talking about today, because I'll be referring to an ATO ruling, which is the Bible, if you like, in terms of business real property. And it's a ruling that was released in 2009. So, we're in 2025. This has been around for a couple of decades now. And really, it's what is a business real property and what constitutes business real property. And the definition is that it's real property. That's the first limb. Real property used wholly and exclusively in one or more businesses. So it has to be real property. It can't be some like obscure kind of, out there sort of investment or asset that, doesn't meet that definition of real property. Does it have a land title, et cetera, et cetera. Vacant land, commercial land, residential land, government, Commonwealth land, all of those things. So it's got to be real. It's got to be real property. And then it has to meet this definition of wholly and exclusively. Now, wholly and exclusively is a fairly high bar to get over, because if you think about the words wholly and exclusively, means that the property must be used in its whole, in its entirety, exclusively in this business or in a business. And the interesting part about that, Darin, is it doesn't have to be a business that I run. If I'm talking about my super fund, and let's say that I run a business and I've got this land, well, that kind of, connects the dots there fairly easily. But if I lease my land to you for your business, my super fund could still acquire that land if it's used in your business. So it has to be used in a business, not necessarily my business personally, if I'm talking about me as a person. So, but wholly and exclusively is fairly high. And if we don't meet wholly and exclusively, we don't meet the definition of business real property. So those are the two kind of crucial parts to start with.
And that wholly and exclusively, that can come down to exactly, if we're talking about a piece of land, exactly how much of that land is actually being used. If you've got different structures, like you might have a factory or an office space that somebody's using, but how
Yeah.
much of that actually occupies the land will depend on whether or not it meets this definition. And that's obviously something to really take into account.
Yeah, absolutely. And, in the ruling, Darin, the ATO actually do talk about that if the land is not being used at all, then it can't meet the definition of wholly and exclusively because it's not being used, right? So,
Yeah.
so there is quite that distinction about if there's no use at all, if it's just vacant land, it's not being used at all, then it won't necessarily meet that, or face value, I should say. It won't meet the requirements of wholly and exclusively. The
Yeah.
ATO do have a paragraph, and it's paragraph 31 in this ruling, that talks about a minor or insignificant or trifling non-business use could be accommodated under wholly and exclusively. So it's not, the ATO are not 100% black and white here. So they're saying if there is some sort of minor use or trifling or insignificant use, it's not going to change the outcome of this, definition of wholly and exclusively, then that can be accommodated. That's okay. It won't, rule out, no deal. It won't rule out the definition of wholly and exclusively or business real property, but it really comes down to a case by case scenario. So, for example, if you've got, you've got a whole, property, a factory property, and you store your personal, let's say you've moved house, right? So you've got a factory, you move out of your home, and you decide for a period of time that you're going to store your personal belongings in your factory. Does that change the definition of wholly and exclusively? Because you were using it for a business, and now you're actually using it for business and personal purposes. So that could actually, at that point in time, and this test is at the point in time in which the super fund wants to acquire the asset. So it's a test at a point in time. What does it look like at that point in time? Does that personal use of this commercial or business property actually change the definition? And potentially it could, depending on how big the factory is, depending on how long you stored your personal belongings there, depending on, a whole lot of range of factors and variables, that could actually rule out meeting the requirements of business real property at that testing point in time. So it really is quite a subjective thing around, what does the scenario look like? So there's not, a checklist of, 10 things that you must do to meet that business real property definition. You really have to do a case by case scenario.
No, just to build out on that point, Tracy, if you're talking about a test, which is a point in time, what
Mm.
happens if the use of the asset changes from that point in time to another point in time where potentially it won't meet the test anymore?
Yeah. So after we've acquired it.
Yeah,
Yeah, so let's say that at the point in time that we want to acquire this asset, we can meet the definition of business real property. So we've ticked all of the boxes. We're confident and comfortable that we've got wholly and exclusively, we've got real property, we've got business real property. If something changes after that, then we move away from this acquisition of asset rule that we're talking about right now, and then we have to look at, well, what other superannuation laws and regulations do we potentially have a problem with? And so that could be then come financial assistance to a member. It could become an in-house asset issue. So there's other things in the superannuation laws that we'd have to then flag at some point in time if we no longer have this kind of wholly
yeah.
exclusively thing. But the acquisition of the asset, the test at the point in time that we want to acquire this property requires us to have a look at these rules. So once we've done that, we're no longer bound by these rules. We're then bound by all of the other rules.
Other rules. As usual, nothing is straightforward. But I suppose in some ways, I know this is maybe a little bit general, but you can almost apply some sort of common sense test. I mean, look, the individual will know whether or not they're on the margins with, geez, I'm using that for that. Does that really encroach? Oh, it could be borderline. I mean, you know.
Of course.
You would know. I mean, if you're honest with yourself, you would know that, yeah, I'm probably pushing the limits here. I might have to get a ruling on this one, as opposed to just charging ahead saying that, yeah, I'm confident that, yeah, it's only, I think that would be viewed as insignificant, so I'm just pushing ahead with this. I mean, deep down, you probably would know. So again, maybe applying some common sense might be a good threshold to begin with before you get into any sort of expert sort of ruling or tax ruling on these things.
Absolutely, Darin. And I think that the good thing, because this is a test at a point in time, if we were to, analyze a situation today and there were some issues around the wholly and exclusively point of view, we would then say, okay, well, how can we fix that? Can we fix it? What steps and what activities do we need to now undertake so that we can meet genuinely and bona fide meet these requirements under the business or property provisions. And 9 times out of 10, you would be able to do that. So if you were, using a factory for all of your personal storage, well, go and get a storage shed, go to Kennards or Storage King or whatever they are, and move all of your stuff there so that you then can actually have a look at this factory complex, and you can look at having, a lease in place with another business, which is probably better for you anyway, to be honest, if you want to have this in the super fund in the first place. So the super fund needs to have a return on investment in some way, shape, or form. So if you're going to just have all of your, excess clothing and shoes in the factory, then maybe that's not the best use of space in the first place.
No, perhaps not. Now, Tracy, I'm going to travel further down this path and maybe
Please.
peel another layer of the onion back from
Mm.
your original statements, comments, and go into another bit of this definition. We just talked about what is wholly and exclusively, but with business real property, that first word, business real property,
Mm.
I suppose we
Mm.
have to then explore what constitutes a business, because if you can't satisfy that definition, it's obviously not going to work either.
And is that the $64 million question or the $6 million question, whatever that is? It's a throwback, isn't it? Absolutely, Darin. And, business real property does have that word business to start with. So what constitutes a business? And, we could, throw scenarios around scenarios here around what actually constitutes a business. And again, I don't want to have this throwaway today that says, well, it depends, because it does. But, when we're talking about business, we have to then go back even further in time because the ATO have a tax ruling which was issued back in 1997. That was the year I got
Wow.
married, 1997. So it's been a while. So yeah, the tax ruling 9711 has, a whole list of characteristics about what actually constitutes a business and what does a business look like. So if we want to apply all of these kind of parameters around what a business is, again, it's not necessarily a checklist of 5 things or 10 things that if you tick all of these boxes, you are guaranteed that you have a business. But these are the guidelines that the ATO give you to be able to more than likely meet the definition of a business. And common sense comes into this as well, Darin, because common sense says, well, if I only do 3 things in a year and I make, $3,000 and I don't have that repetition and I don't have that scale, then perhaps I'm not really running a business. Perhaps this is a bit of a hobby and,
Yeah.
therefore I am not in a business. As much as I would like to deduct all of my personal expenses against my business income, it's just not really going to cut it, So again, we kind of know where we are running a business and where we're not running a business. Where it becomes complicated is where we've kind of got a bit of a crossover, and property investment is where this complication comes in, I guess, in terms of this particular topic around business real property, because are we in the business of running a property investment business? How many properties do we need to have? Is it as simple as
Yeah.
that? What do we need to look for in terms of running a property investment business? Because this is the question that comes up time and time and time again. I have a property investment in my own name or with my husband or in whatever structure I've got it in. Can I put it into my super fund? Can I transfer it into my super fund? And this is where we've got to come to each and every time that question is raised. Well, do you have one residential investment property? And does that actually constitute a property investment business? And I think, 99.9% of people would probably agree that having one residential property investment is not going to genuinely meet the definition of a business. What do you reckon?
Oh, I totally agree with you. I mean, any business owner or anybody who's familiar with any of this stuff, or again, applies a modicum of common sense, would probably figure out that there's not enough scale to
Yeah,
argue that you are running a business if you've just got one single property that you're looking after, and that's the sum of your activity. I mean,
yeah.
it just if you want to apply the pub test or whatever colloquialism that we want to use here, I don't think that cuts the mustard in any way, shape, or form. I don't think that even the most fervent argument could convince anybody that would cut the mustard.
Yeah, exactly, Darin. And so then okay, so we go one is a boom, that's out. Is it 2? Is it 3? Is it 10? Is it 20? Like where does the line get drawn here where you can then say, oh, wow, actually, I've got a property investment business, and therefore my properties that are sitting in my property investment business will meet the definition of business real property, and therefore I could transfer them into the super fund. Now, before we talk about that, because there's like a few examples in the ruling that I want to discuss with you, Darin, I just want to park on this issue of transferring property in. And I kind of made the point before, but I don't know if I made it well enough. So if I can try and enlighten myself here or enlighten my point here, when we're talking about transferring property into super, Darin, we still have to take into consideration the liquidity of the super fund in order to be able to acquire that asset. It's not just, here's a piece of paper and I'm transferring that piece of paper over to my super fund. We still have to work out how is the super fund going to pay for this asset. So the super fund is going to pay for the asset either by cash that it has, and it gives you the cash, or by borrowing and it gives you the cash, or by a combination of a contribution and assuming that you can meet, assuming that you have contribution cap space, which, you know, is a whole other conversation in itself. So that you've actually got to think about, okay, well, it's not just a matter of saying, oh, the property is in my name, now it's in the super fund name. We've still got to take into consideration all of the conveyancing conversations and all of the cash flow conversations that we would have if I was acquiring the property from you, Darin. Like, because you're not going to give me the property with nothing in return. I know you're
No,
generous, but, you know, that was a very
not
quick
much
no.
else.
So we've got to take into consideration that still. So I just wanted to remind our listeners and our viewers that it's not just, oh, we can meet this, okay, we can get the property here. We still have to think about, well, how is that going to be funded?
No, it's a great point. I mean, and it can be lost because obviously these are flexible strategies and strategies allowable to an SMSF only. And you might think that, oh, this is wonderful, you know, we can do this, we can do that.
Yeah.
Still has to be viewed with the lens that it is a transaction of some description. And any of the elements that you would normally apply to any other transaction still applies to these things. You can't just wave them away just because, oh, but it's mine. I'm just transferring the ownership from me to the super fund. What's the big
Yes.
deal?
Yes.
Just change a couple of things on the property deed and away we go and we're off to the races. No, it's not
Exactly.
quite as simple as that. And again,
No, it isn't.
you must take into account that these are proper transactions that must be executed properly.
Yeah.
Otherwise, you know, you're in compliance trouble.
Once again. Yeah, so it's just important because there was some discussion on a forum recently that I was reading through, and it was confusing around. Well, wait a second, it's my property. I don't want the cash. I just don't want the property in my name anymore. Well, actually, no, you've got to still have that kind of, you know, due consideration given. So that was just to segue into that. So coming back to some examples around property investment businesses and how many properties are enough, and is there a magic number? And the short answer is no, there's not a magic number of properties. It really comes down to the scale and the operation and the repetition and the, you know, capital investment that's gone into this property investment business, just like any other business scenario, business operation that you would think of. So there's a couple of, like, there's 2 or 3 examples. If we've got time, we'll go through 3. But the first example is example number 13 in the ruling. And for anyone who actually is wanting to transfer property into super, these examples in this ruling, 2009/SMSF ruling 2009/1, there's 37 examples in the ruling.
Wow.
We would never have time to go through 37 examples, Darin. We're here for days. But, you know, there's the examples are actually really, really good. And so anyone who's wanting to do this or has property in their own name, wondering, oh, can I get that into my super fund? Or, if, you know, should I even think about it? These examples are a really good starting point. And I've referred many clients over the years to read these examples and, you know, cut and paste them and sent them the examples because I think they're really good. And this is the ATO, the regulator, giving us these examples. So I think it's worthwhile having a look at them. So the first one is about Miss Hend, who has 2 holiday flats. So she lets them for short-term accommodation, i.e., you know, Airbnb kind of concept, at a popular holiday destination. She and her partner manage and they maintain the flats themselves. So they do the cleaning and repairing and the bookings and all of the, you know, the banking and all that sort of stuff. So they have set up their super fund and they both are members of the super fund and they want to actually the super fund wants to acquire these particular flats from her. So the ATO have basically said that the elements of repetition, my apologies, and continuity of acts and transactions indicate that there is a possibility of there being a rental property investment business carried on because it's, you know, ongoing. It's not just a one-off. You know, there's lots of continuity here, lots of repetition here. However, the scale of the operation is such that it is not considered to be a business in the ATO's view. 2 holiday flats, yes, you've got lots of continuity and repetition, but there's no scale there. So the ATO say, nope, that's not a business. And therefore, those holiday flats do not meet the definition of business through a property, therefore the super fund can't acquire them. So I think that's pretty straightforward. One property, two properties, we're still on a no here, aren't we? So that one makes sense. And I think
Yeah,
that
sorry,
no,
keep
that's
going.
fine. I think most people sit within this sort of scenario. They have one or two.
Well, I think it's a particularly relevant example to raise now, and full credit to the ATO, because obviously this ruling came out in 2009, which was a way back. So they wouldn't have witnessed some of the norms that we're seeing now, because that is particularly relevant with stays and Airbnb and those sorts of things, which I know a lot of people are looking towards including those sorts of activities, looking to including them in the SMSFs.
Yeah.
Particularly relevant right now.
Yeah, absolutely. The futurist of the ATO predicted that back in 2000.
Well, good on him or her, because well done.
Exactly. So then we go to kind of what I would suggest is probably the other end of the extreme, which is the next example in 14. And this is Mr. Wood, and he has 20 residential units. So we've gone from 2 to 20. Okay. So I don't know too many people that have 20 investment properties. But 20 residential units leased to long-term residents. So these ones are not short-term. They're not the Airbnb kind of thing. Mr. Wood manages and maintains the flats on a full-time basis. And I think that's fairly relevant because if you've got 20 investment properties to manage, it probably would be a full-time scenario. And he's living on the generated income from those leases. They're not mortgage units, so they're all mortgage-free. He wants his SMSF to acquire some of the units rather than sell them to a non-related party. And it says here, the scale of the operation together with the elements of repetition and purpose indicate that Mr. Wood is carrying on a property investment business. So the ATO have said, well, even though the tenants themselves are using the properties as their residences, as their primary residences, which is obviously not a business activity, the fact that Mr. Wood himself is owning these properties, he has 20 of them, he's living off the income, he's running it on a full-time basis, in the ATO's view, that does meet the definitions of a business, and therefore those 20 units would meet the definition of business through a property, and therefore tick, 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 the super fund could acquire some or all of those units, provided, of course, the acquisition takes place at market value.
Well done, Mr. Wood, for having
Well
20
done, Mr. Wood.
investment properties. I'm extremely jealous of him there.
Yeah.
Does the ATO ever take into account um, the amount of revenue that's generated by these things?
I
Because we talk
don't,
about scale, and
yeah.
obviously the Airbnb thing, if it's a little bit sporadic, then you're obviously not going to be raking in the revenue or the income from those activities. But do they ever take that into account?
Look, I don't have a definitive answer to that, Darin. However, I will say these couple of things. In this example, it does say Mr. Wood manages and maintains the flats on a full-time basis, living on the income generated from the leases.
Yeah, okay.
So it seems
Right.
to support the fact that this business of property investment is actually supporting him on a full-time basis. Now, I don't think the ATO can categorically say, well, should that be $50,000 a year or should that be $300,000 a year? I don't think that's in the parameter of the ATO to say, but it does kind of indicate that, there is a profit-making enterprise going on here. And certainly one
Yeah.
of the definitions of what a business is it a profit-making enterprise? You should set out to make a profit, even though you might not, due to other circumstances, make a profit in a particular year. Like one of the characteristics is that you intend to make a profit. So I think it doesn't say about level of income, but I think that, it is supporting the fact that he's living off the income. So to me, that says that is a fairly, significant input here.
Yeah. No, I agree. The ATO seems to have conceptualized it well, as opposed to quantifying it, which is
Yeah.
probably a better application anyway. So again, whoever's written this, well done to
Well
them. And
done.
only praise for this ruling. Now, what was the third example you were going to touch on, Trace?
Yeah, so the third example is Miss Harrington, and she has 10 residential units. So we're going to go cut back in half, right? So we started with 2, that was a no-go. 20 was a yes. Now we're back to 10. So the change of facts with this particular one is that Miss Harrington uses an agent. So in the previous example, Mr. Wood was doing everything himself.
Yes.
And in this example, we're using the agent. Now, the ATO says that the units are not business real property as they are not used wholly and exclusively in a business.
Mm-hmm.
Miss Harrington does not carry on a property investment business as she uses an agent to manage the properties. The premises are not used in the agent's business, which is to provide services to Miss Harrington.
Mm-hmm.
So that one change, if Miss Harrington had have run 10 units herself in the same scenario as Mr. Wood, perhaps there would have been enough scale there. We don't know, like the ATO doesn't give us the catch-all phrase to say, if you did this differently, it would be a different outcome. But the difference there is that being interposed with an agent running it fails the business real property test.
Yeah, that would make sense, obviously, because they're against obviously outsourcing these sorts of things because it really comes down to the nitty-gritty of what you are actually doing for the business. And I suppose they have to make that tough because they can't allow these parameters to be that relaxed that everybody piles on to, oh yeah, I've got a business real property because I'm doing this. Because
Yeah.
let's face it, that scenario is probably looking towards more of a passive income situation rather than actually running a business. And anybody who has run a business or is running a business knows that there's no such thing as passive income when it comes to running a business. So that actually does make a lot of sense. But I got some
Wait,
bad
don't we?
news. Oh,
Don't we
sorry.
all just sleep? Don't we all just sleep and make money when we're sleeping, Darin? Isn't that how the magic pill of how everything works these days?
I wish that was the truth. I really do wish that was the truth, but unfortunately, that's not reality.
No, that's
And I've got some bad news, Tracy, and that
we're out of
is,
time.
yeah, run out of time again. So
Again.
all that's left to do is thank you for your time. Again, great chatting with you today.
Thanks so much, Darin. It was really fun chat, and looking forward to continuing our conversation about property next time. I've got a little bit of a chat about sea change and tree change properties, and what does that mean for a super fund?
Very good, very important issues again. These strategies do come up a lot, actually,
Yeah.
because people are looking to not manipulate the system, but maximize how they can use their SMSF. But again, they have to be aware of the parameters as to what they can do and what they can't do. So thanks, Tracy. I look forward to talking about that subject as well. Thank you, most importantly, to all of our readers, subscribers, listeners today. We hope you get as much out of these sessions and enjoy them as much as we enjoy bringing them to you. Thank you to my staff for putting this all together. And don't forget, if you are enjoying our content on YouTube, please smash that like button and subscribe to the channel. And please make sure that you watch the podcast at the end because that also really helps us too. But until next time, thanks for your company. Have a great day. And we look forward to you joining us on the next Trusted Trustee podcast.
Thanks, Darin. Bye for now.